Namaskar dosto, welcome back to the Stock Info. Today we are going to discuss one important subject in our episode 31. HDFC Bank profit plus 5%, ICICI Bank profit plus 16%. Same quarter. Three numbers explain everything for you. The complete banking health scorecard, NIM plus NPA plus CASA, predict volatility before the market. Q1 financial year 27 results season just ended. HDFC Bank profit up 5%. ICICI Bank profit up 15.9%. Same India, same banking license, same quarter. One bank grew profit 3 times the speed of the other. Why? The most investors read the profit number and decide. Professionals read 3 completely different numbers. Number 1, NIM, that is Net Interest Margin from Chart 51. Number 2, NPA Non-Performing Assets, completely new today. And number 3, CASA ratio, current account, savings account, also new. These 3 numbers together predict banking sector volatility. They tell you which bank is improving and which is deteriorating before the profit number does. In this episode 31, the complete banking health scorecard, and it is the third and the final topic from your YouTube transcription page. In our next section, what is an NPA? Non-performing asset, we'll discuss about that. Build the NPA concept carefully. It is new to most retail investors. A bank makes money by lending. If the borrower repays, profit it will get. If the borrower stops repaying, then the loan becomes non-performing asset. The technical definition, any loan where the borrower has not paid interest or principal for 90 consecutive days, the loan is classified as NPA. Banks report 2 NPA numbers, gross NPAs and net NPAs. Gross NPA is the total value of all bad loans as a percentage of their total loans. It measures the new raw problem. Net NPA, it is gross NPA minus the provisions the bank has already set aside for those bad loans. Provisions are money the bank has already deducted from its profit to prepare for potential losses. Net NPA measures the residual risk after the bank has prepared for the worst. HDFC Bank Q1 financial year 27 GNPA 1.7%, net NPA 0.4%. ICICI Bank Q1 financial year 27 GNPA 1.38%, net NPA 0.35%. ICICI Bank is a higher GNPA, more bad loans but lower net NPAs. Why? Because ICICI Bank has set aside more provisions to cover those bad loans. ICICI Bank's provision coverage ratio is 74.7%, meaning for every rupee of 100 bad loans, ICICI has set aside 74.7% provisions. This is third NPA metric, the NPA coverage ratio. Higher coverage ratio means the bank is better prepared for the loan losses. Higher coverage means less future earnings impact from existing bad loans. Now coming up, the CASA ratio, the single metric that explains why ICICI Bank earned 83 basis points more per rupee than the HDFC Bank and how CASA predicts future net interest margin and future NPA risks. Now in our section 3, the CASA ratio, the root cause of NIM difference, the most analytically sophisticated section, the CASA NIM NPA causal chain. CASA stands for current account and savings account. Now, the current ratio, current account pays 0% of interest to its depositors. Savings account pays 3 to 4% to its depositors. Together, CASA deposits are the cheapest source of funds for any bank. Compare the fixed deposits which pay 6.5% to 7%. The banks with a high CASA ratio has more cheap money to lend out, which means cost of funds is lower, which means higher NIM because the spread between what they lend and what they pay for funds for is very wider. Now look at the data. HDFC Bank CASA ratio falling from 37.5% in financial year 25 to approximately 33 to 35% estimated for financial year 27. ICICI Bank CASA ratio approximately 40% plus. This CASA difference is the root cause of NIM difference. ICICI Bank NIM is 4.9%, HDFC Bank is 3.26%. 83 basis points of NIM difference explained almost entirely by the CASA ratio, and more money from CASA, cheaper deposits, means the bank can afford to be more selective about which loans to make. More selective lending leads to better asset quality and lower NPAs. Less pressure to take risk means the bank can reject borderline customers. This is the causal chain. Higher CASA leads to a lower cost of funds, which leads to higher NIM, which reduces the pressure to lend aggressively, which leads to lower NPAs. CASA is not just a metric, it is early warning signal for future NIM and NPA trends. In our section 4, we discuss the NIM NPA connection, the early warning system. The most practically valuable section, how falling NIM predicts the future NPA rise. Now I want to show you the most important connection in banking analytics, the NIM NPA relationship. When bank's NIM falls, bank earns lesser rupee per loan. To maintain the profit growth, the bank faces two choices. Choice number 1, grow loans book faster, more loans at a lower margin. Choice number 2, lend riskier borrowers who pay higher interest rates. Both choices, if taken excessively, eventually lead to a higher NPAs. This is why falling NIM is early warning of the future NPA pressure. It is not immediate. There is a lag of 4 to 8 quarters, but consistently falling NIM over 4 more quarters without CASA improvement is a signal of watch NPA closely in subsequent quarters. Look at the HDFC Bank. NIM fell from 4.06% in quarter 2 financial 25 to 3.26% today. That is 80 basis points of the compression over 4 to 6 quarters. GNPA rose marginally 2 basis points last quarter. The asset quality is still very healthy. HDFC Bank is a high quality bank, but the NIM NPA early warning signal is the reason. The professional analysts watch this NIM trend so carefully. If CASA stabilizes and recovers, NIM recovers, NPA risk reduces. If the CASA keeps falling, more NIM compression, watch NPA carefully. Axis Bank management said their quarter 1 27 NIM is 3.46% is the cycle bottom. If they are right, NIM should improve. From quarter 2 27 onwards, the NPA risk reducer. That is the professional framework for pending banking sector volatility. Next, in our section 5, we will discuss the complete banking health scorecard. Apply all the three metrics together. The most complete banking analytics in the series. Now, let me give you the complete banking health scorecard. 5 metrics. 3 banks assessed in one table. Form number from chart 49, PB ratio and ROE, the valuation layer. From chart 51, NIM, the product quality layer. From episode 31, GNPA, net NPA coverage ratio, these assets quality layer. From episode 31, CASA ratio, the funding quality layer. Together, these 5 layers tell you the more absolute a bank's health and a future earnings power they can than any single metric. ICICI Bank today NIM is 4.09%, highest among the large private banks. GNPA is 1.38%, improving consistently, and net NPA is 0.35%, better than HDFC Bank coverage. Coverage ratio is 74.7%, well provisioned. CASA approximately 40% plus, strong and stable. HDFC Bank today, NIM is 3.26%, compressed GNPA is 1.17%, excellent absolute level. Net NPA is 0.41%, slightly higher than the ICICI. CASA falling 37.5% to approximately 30 to 35%. NIM recovery depends on the CASA stabilization. Axis Bank NIM is 3.46%, management cost cycle bottom. GNPA 1.28% improving, and NIM cycle turns. Axis Bank offers interesting recovery options. Live demo of finding the NPA and CASA on screener.in and quarterly results. Type screener.in in Google browser. You can get this screen, log into it and search for a company. Click here, go to HDFC Bank and select the bank. You can see the details of HDFC Bank with market capitalization, current price, high, low, everything. Lot of ratios are here. Then what you can do is go to this ratios section. Here you unlock this insights. You can see CASA ratio here. It is from March 16 43.2 was there. Now it has come down to 34. It has reduced for HDFC Bank. Gross NPA is also increased from 94 0.94 to 1.15. Number of branches increased. Number of customers 37.7 to 101. It has increased. Market share in advances 5.8 was there. Now it has increased to 14. So like this you have to see. Now you have to go to the top. Here top you can see this market capitalization position. Read more here. If you click on the read more section, the company is India is one of the three considered important with 15% share. Banking sector advances 37 market share. Read more here. HDFC Bank Limited, also known as HDFC company. These are always lot of things are there. Retail banking is 42%, wholesale banking is 23%, insurance 17%. Key metrics: capital adequacy ratio 19.9, net interest margin 3.5, gross NPA 1.2, net NPA 0.4, cost to income 39.2, ROE is 1.9%. So branch network, branch breakup, loan book, deposits, everything is available. International business, amalgamation, zero promoter holding, subsidiaries, all the details are available here. Like this you have to find out. Click each. Now I have shown you how to see the HDFC Bank. Like that you have to see HDFC, ICICI Bank, Axis Bank, SBI. Compare all these things before you take any investment decision. This is how you can check in screener.in before taking any investment decision. Now in our section 7, predicting bank volatility, the action framework, the professional flows, action signals for banking stocks volatility prediction. How to use banking health scorecard predict volatility is an important thing. Signal number 1, NIM declining for 3 or more consecutive quarters with no CASA recovery plan. This is the early warning and the future earning pressure. Except banking stocks can be volatile around result days. In our short 51, NIM lessons applied over the multiple quarters. Then the signal number 2, GNPA rising quarter on quarter for 2 or more quarters. Even small increase 2 to 5 basis points per quarter if consistent indicates stress building. Previous provisioning rise, profit growth slows, stock underperforms. Signal number 3, coverage ratio falling. If the bank's provision coverage drops below 60%, they are under provisioning for known bad loans. Future earnings are risk when those loans crystallize into losses. Signal number 4, CASA ratio declining. This is the earliest warning of all. CASA decline precedes NIM compression by 2 to 4 quarters. HDFC Bank CASA decline first, NIM compressed later. The signal was available in advance. Then when should you buy banking stocks? When NIM is at the cycle bottom. At the Axis Bank, management stated that Q1 financial year 27 and the CASA is stabilizing, the GNPA is improving or stable. This combination indicates the worst is known and the recovery is beginning. That is when long-term investors build positions. Use the 5 metric scorecard every quarter for every banking holding. Comment below which bank do you own and what does your scorecard show today. Please subscribe, please like with family and friends and support me for bringing more such good videos for you. And thanks for watching.